AMC stock has been one of the most actively shorted stocks over the past year, and now finds itself at the center of a battle between hedge funds and the average retail investor. In this video, we look at AMC's history, the current short situation, and determine whether or not AMC stock is a good long-term investment. Stick around to the end of the video to hear my one-year price target. Let's get started. AMC Entertainment Holdings is an American movie theater chain founded by three brothers in 1920 and originally named Dubinsky Bros. After the family changed its surname, the company was renamed to Durwood Theaters. Originally operating as a single theater in downtown Kansas City, Missouri, AMC began to aggressively expand under the direction of Stanley Durwood, son of one of the three founders. Durwood would go on to acquire all downtown cinemas in Kansas City, and in 1961 purchased two locations within a Kansas City suburban mall with the intention of combining them into a single large theater. However, after learning the units could not be combined, he would go on to open the company's first location with multiple screens, and one of the first multiplexes in America. Durwood would later claim that the idea of multiplexes first came to him in 1962, when he realized he could double his income by operating two screens with the same size staff. In 1968, Stanley Durwood renamed the company American Royal Cinema, after a livestock and horse show with a similar name, was forced to change it to American Multi-Cinema after being sued by that same company. He took the company through its first IPO in 1983 and continued to expand AMC until his death in 1999, including pioneering the first North American megaplex, patenting the pivotal cup holder armrest, and introducing stadium seating. In 2004, the company was purchased by JP Morgan Partners and Apollo Global Management investment firms, and put through its second IPO in 2010 at a valuation of $450 million. In 2012, AMC was sold to Chinese conglomerate Wanda Group for $2.1 billion, acquiring more than 5,000 AMC screens and making Wanda Group the largest theater chain in the world at the time. Wanda Group would continue to hold majority stake in AMC until February of this year, when a subsidiary of Wanda converted its AMC shares from Class B to Class A in preparation for an eventual sale, and in doing so, dropped their total stake below 37% due to the voting structure of each share class. Today, AMC is led by Chairman, Chief Executive Officer, and apparent ape, Adam Aron. Aron, a graduate of Harvard University and co-owner of the Philadelphia 76ers, has considerable experience in the leisure industry, acting as a CEO at Norwegian Cruise Lines and Vail Resorts prior to joining AMC in 2015. Adam Aron has made significant changes to AMC during his tenure. In 2020, he signed a deal with Universal Pictures, allowing studios to distribute movies to streaming services after only 17 days in AMC theaters, and in return, earning a fee from rental of those movies. In September of 2021, Adam Aron announced that AMC Theaters would accept Bitcoin, Ethereum, Litecoin, and Bitcoin Cash for online ticketing and concession payments by end of year. Since his arrival, AMC has become the largest cinema chain in the United States, operating 950 theaters and over 10,000 screens across the world, and in recent months has brought in huge funding as a result of a number of newly issued shares and share sales during a time in which the stock was experiencing a series of short squeezes, moving up 300% in January and reaching an all-time high of over $72 in June. There is, however, widespread speculation that the volatility seen in past months is just a precursor for a larger short squeeze that is yet to come. Let's take a look. A short squeeze is a unique situation that occurs to heavily shorted stocks that causes a sharp increase in price. When a short seller shorts a specific stock, he borrows shares of that company and immediately sells them to another buyer at the current share price. The shares must be returned before an agreed upon time, and if the share price falls in the meantime, the short seller can buy back the shares he sold at a lower price and return the shares to the original lender, in the process pocketing the difference in price. At least that's the plan. A short squeeze happens when instead of moving down, the share price increases unexpectedly. Some short sellers, knowing they have a limited time to return their borrowed shares, may choose to cover their losses. To do so, they look to purchase shares at that increased price to return to the original lender. In doing so, the short seller inadvertently drives the price up, spurring other short sellers to cover their position, and a vicious cycle is started. As panicked short sellers look to buy shares, the price continues to move up until enough shareholders find a price they're willing to sell at to meet the demand. This is where Reddit steps in. When shareholders refuse to sell, short sellers are unable to cover their positions, and we see huge explosions in price. In January of 2021, the hedge fund Melvin Capital lost nearly $4 billion in a single day as a result of the GameStop squeeze, with hedge funds losing over $20 billion that week. Many would argue that AMC has already experienced its short squeeze, but retail investors have championed AMC stock, and Adam Aron has publicly spurred them on, earning ape status in many circles. And the fact is, AMC continues to have a huge short position. As of August 31st, AMC has nearly 96 million shares on loan, a slight decrease from the past month, but short interest remains extremely high at over 18%. This means that most shorts have yet to cover their position, even during a recent market downturn when it would be advantageous to do so.
And then when the individual investor makes money, everyone's up in arms. Oh, they're going to lose their shirt. Don't you think people are trading? If it traded 80 billion shares today, people are ringing the register. I have a kid who bought a house. He made $50,000 and bought a house. So yes, some people are going to lose and some are going to win. But if they want to change the rules of the game now because the general public is making money after decades of the shorts crushing thousands of stocks into the dirt, I have watched stocks being crushed completely to zero, and no one ever whispered anything because those stocks didn't have Wall Street sponsorship. They were small names. Maybe they went public through first takeover. Whatever.
Retail investors continue to champion the stock, and by holding current price levels, they are strangling shorts that had been trapped by previous price movement. The longer this holds, the more likely these shorts cover at a higher price. In doing so, they may spur the mother of all short squeezes. But is the company making money, and is the stock worth investing in? AMC had been making consistent gains in revenue and profitability after the arrival of Adam Aron, until it was hit by the pandemic. From 2015 to 2019, Aron was able to maintain a consistently profitable EBITDA and double AMC's revenue to a high of $5.47 billion. However, the past couple of years have been very difficult for AMC, with revenue dropping to $1.24 billion in 2020 due to theater closures and lack of willing customers. In the first half of 2021, AMC had net revenue of $593 million, a significant decrease from last year, and a signal that the worst of the pandemic is still being absorbed, although Q2 did surprise to the upside. The majority of revenue being from ticket sales, with additional income coming from memberships, food and drink, and arcade games. Customer attendance dropped to 29 million in the first half of 2021, a decrease of 52%, but 22 million of those customers attended in Q2. EBITDA losses for the first two quarters grew to a negative 445 million, a decrease of 32% compared to the first half of 2020. AMC holds cash of 1.8 billion and a liquidity of more than 2 billion as a result of multiple share sales and the liquidation of the company's remaining interests in Lithuania. Total assets increased to 11.3 billion and net liabilities increased to 12.7 billion. Adam Aron claims that the company has what it needs to continue operating through these challenging times, stating, "We are ever so grateful to the friends and allies that AMC has gathered along the way. They can take comfort in knowing that as we rebuild the company, our deeper cash reserves allow us to stay the course, to innovate again, and to capitalize on opportunities around us. In short, as the largest movie theater operator in the world, AMC is playing on offense again." No doubt this is music to the ears of retail investors that continue to champion the stock. So is it worth buying at current valuations? If you found this video of value so far and would like to help the channel, consider liking and subscribing. Now let's get to my base, bull, and short squeeze cases. AMC currently trades at a market cap around $23 billion and a price of $40 per share, although it experiences significant volatility. AMC has provided guidance for positive cash flow in Q4 of this year and has stated that its large amounts of debt is strategically laddered, with nothing coming due until 2023. If they can maintain liquidity through this year's winter season, I'm inclined to believe theater attendance quickly returns to normal and eventually exceeds previous highs. From 2015 to 2018, AMC was able to grow EBITDA at a compounding annual growth rate, or CAGR, of 20%, and over the past couple of years have been able to streamline operational expenses to survive drastic drops in attendance. I think this new streamlined approach, a resurging consumer base, and a new willingness to dive into digital streaming will allow AMC to return to attractive profit margins. The anticipation of a short squeeze has brought many to the stock and is the reason many are buying, but we're going to value the stock from a fundamental standpoint before ending with where I think the short squeeze could take the stock price. As always, please do your own research before opening any position. I'm not a financial advisor, and these are just my opinions. As a base case, if we use AMC's 2015 to 2018 growth rate of 20%, use an EBITDA multiple of 10x, consistent with what is used for traditional movie theaters, and assume a return to previous EBITDA levels in 2022, we get a 2026 EBITDA of $1.7 billion. At a 10% discount rate, we get a one-year price target of about $20. In a bull case, an increased annual growth rate of 25% and a much more aggressive multiple of 20x due to expansion to streaming services, adoption of cryptocurrency, and vastly improved margins would give us a fair value one-year price target of $48. In the case of a true short squeeze, AMC can reach truly astronomical numbers, especially with a coordinated base of shareholders refusing to sell. I've seen estimates as high as $10,000 per share. I'm hard-pressed to say if this is possible, but at the least, one can look at the price action of GameStop stock and envision a similar increase in AMC. Investors looking to take advantage of a possible squeeze will have to follow the stock closely, as the wild swing in price can be unexpected and short-lived. I recommend doing your own research and following some of the AMC communities on Reddit and Discord. If you'd like me to cover a stock you're interested in, leave a comment below. If you're interested in watching future videos on investing in the stock, crypto, and real estate markets, subscribe. But most of all, thank you for your time, thank you for watching, and invest safe.